Welcome to Market Minute, your go-to channel for data-driven investor insights and timely market updates. If you want to stay ahead in finance and technology, make sure to subscribe and join our community. Hello and welcome to Market Minute, where every second counts for smarter investing. Here, we break down the latest market trends and deliver data-driven insights to help you navigate the world of stocks and finance with confidence. Whether you're a seasoned investor or just starting out, our channel is your go-to source for clear, concise, actionable market updates. If you want to stay ahead of the curve, don't forget to hit that subscribe button. Join our growing community of informed investors. Now, let's dive into today's story. In the vast and ever-shifting landscape of the global stock market, few names command as much attention and carry as much weight as Nvidia. Once known primarily to gamers, Nvidia has transformed into the undisputed heavyweight champion of the artificial intelligence revolution. Its GPUs are the digital heart and soul powering the data centers that train and run complex AI models like ChatGPT. Today, Nvidia is less a component supplier and more the foundational architect of a new technological era. And its performance is a barometer for the tech sector. When Nvidia reports, markets hold their breath. This video walks back to the last earnings call, covers recent news, and explains what investors should expect and why it matters. Subscribe to Market Minute for data-driven investor insights. Like and subscribe if you find this useful. To appreciate the pressure building into the next report, we travel back 3 months to the late May earnings call. The results were astonishing. A colossal outperformance that sent analysts scrambling. Nvidia reported $26 billion in revenue, up 262% year-over-year. H100 and H200 GPUs commanded premium pricing, driving spectacular margins and massive net income. The data center segment was the main driver. $22.6 billion, up 427% YoY. Growth was fueled by hyperscalers, AWS, Microsoft Azure, Google Cloud, and a growing enterprise customer base. The stock surged, pulling the tech market higher, and Jensen Huang's guidance of roughly $28 billion for the next quarter was the cherry on top. That quarter set a powerful precedent. Investors now expect brilliance. Anything less could feel like disappointment. To understand Nvidia, we look under the hood, the distinct business segments that make the company. It's not a monolith, but one segment dwarfs the others. Data center is the crown jewel, massive enterprise-grade GPUs, H100/H200, Mellanox networking, sold in rack-scale systems. These systems sell for tens of thousands each and are deployed by the thousands in large-scale server farms. The compute they deliver is the raw power behind training the largest AI models. Gaming remains profitable and important. GeForce RTX drives consumer loyalty and incremental tech. Professional visualization powers architecture, media, and scientific workflows, high margin but smaller than data center. Automotive and robotics, drive Jetson, are strategic long-term bets. Modest revenue today, big potential tomorrow. Nvidia's story is also told in its strategic partnerships and expanding ecosystem. Deepening cloud collaborations with Microsoft, Google, and AWS show hyperscalers doubling down. Partnerships, Dell, aim to bring AI factories on-premise for enterprises, expanding Nvidia beyond hyperscalers. Sovereign AI projects in Japan, France, Canada represent long-term government demand. CUDA remains a powerful moat, millions of trained developers and a vast library of AI tools. Software plus hardware lock-in creates stickiness, an ecosystem that compounds Nvidia's advantage. These strategic moves broaden demand and reduce dependence on a few customers, a key theme investors will watch. A key driver of excitement is the Blackwell platform and the B200 GPU, promised to be a substantial leap forward. Jensen Huang unveiled Blackwell to thunderous applause. Investors will look for production ramp details and early orders. Nvidia claims Blackwell can offer up to 30x inference performance versus H100 while using less energy, a powerful selling point. Beyond chips, Nvidia packages Blackwell into rack-scale systems, GB200 NVL72. 72 GPUs plus 36 CPUs, effectively a supercomputer. Investors will be listening for updates on production ramp timelines and initial customer demand. Higher performance per watt addresses a major pain point for data center operators, making Blackwell compelling. Any positive anecdote about early orders or a faster ramp could be the catalyst that pushes the story forward into another multi-year chapter. Wall Street has set a very high bar. Consensus for Q2 FY26 revenue, roughly $28.2 billion, slightly above company guidance. Margins expected in the high 70% range, EPS around 63 cents. Analysts will parse margins carefully for signs of pricing power or compression. Nvidia's report moves the whole market. Strong results lift semiconductors, cloud suppliers, and AI-enabled SaaS. Weak results can trigger broad sell-offs. Because Nvidia contributed meaningfully to recent S&P gains, its guidance can shift macro market sentiment. Key risks: extremely high expectations, law of large numbers, geopolitical export controls and China exposure, competition from AMD and in-house cloud chips, and a potential moderation in capex. Export controls and accelerated domestic Chinese chips remain a tangible headwind to monitor. Opportunities: inference at scale, sovereign AI, industrial and scientific applications, BioNeMo, Omniverse, and the potential to be the OS for AI. For investors, balance optimism with valuation discipline. Watch guidance, margins, and Blackwell ramp. If you found this useful, please like, subscribe, and hit the bell. This is Market Minute. We'll follow the earnings day live and bring timely analysis.